Ni hao ma. Let's trade some Forex. Let's go! G'day, Jimmy. Good morning. How you doing? My name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client. We salute you in this gig called Forex. If you're new to these webinars, please like, please subscribe, please comment, please participate, please ask questions, treat your fellow traders with dignity and respect that they deserve. If you need a trading account, I highly recommend Traders Way because they are making this webinar available to you. Imagine it as someone investing into your success now, and they're hoping that you pay it back. That's pretty cool, right? So you can go now to tradersway.com, download a demo account, test out the execution speed, test out the spreads, test out things like the yield, because I'll tell you, the yields that Traders Way pays will probably blow the doors off of what those other brokers pay. Go check it out. And of course, world-class customer service and support. So, nice to have you on our team. Tradersway.com, yo. So what's going on? NFP week, yep. This is the last day of the quarter, yep. Lots of things going on, lots of good things going on, lots of opportunities. Markets are moving. Everything's golden. Thank you for being on my team. So today I suggest we go and go through the calendar as well as go through the trades. Here's Aussie Yen. Here's the new one. So where's my pen? Took this one last night. I think it was 2:30 in the morning. Yeah, Uncle Wayne's not sleeping again. Yeah, 2:30 in the morning. Yup. Nice, huh? So anyways, working its way up. And of course, this is a stack, right? It's a stack because if you get off this chart and you go on to like 4 hour, no, I got to go daily. If I go to the daily chart, there you go. 1, 2, and hopefully working our way up. If you recall last week, where's she be? There she be. I drew a trade plan for you guys. Looked like this. I know it's not perfect. Sorry. I'm trying to grab this. There we go. But that's the idea, right? Up, 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 down, down, buy. The trade plan at that time was where we thought the central pivot would be. You can see I caught the M2. Really? Okay. Really? Weekly M2. Also, what's been one of the themes we've been talking about the last couple of weeks, really? And I'm looking at this. That's October Central. Trying to catch that too. It's really the same price that I traded, I think 2 or 3 times last week, and I kept getting knocked out of break even. So it's just like yet another version of the trade, and this time it's working out better. So if you remember, I went long here, basically the same price, right? And then went long here, and then I think I tried in here somewhere, and then, well, here I am again. Cool. Okay. The point that I'm trying to say is we planned this out. We talked about it for days and days and days and days and days and days and days. So anyways, I did what I said I'd do, and I hope it works out. So today is the last day of the quarter. It's kind of interesting because sometimes that forces people to do things they may not ordinarily do, just because it's the end of the quarter. So I don't know if they're trying to hit quarterly bonuses, annual bonuses, whatever. Another thing that's going on in the back of the mind, and I'll have to be honest about it because it's not a normal thing. Normally, I'm long and strong this time of year, and I'm not concerned until about the third week of November. Okay? However, last year, the market crashed in October. And I don't ever remember it crashing in October before. But last year, it crashed. Like hardcore yen strength. And I feel like I'm not really, I guess I feel like I'm swimming, down the St. Lawrence Seaway. That's a river that goes, it has currents both ways. Yeah, true story. The river goes that way part of the day, and then goes that way the rest of the day, or another part of the day. So anyways, I feel like there's just as many reasons for all of this come crashing down. There's so many risks in the market. But I got to keep going with my plan, but I'm not willing to die, right? So anyways, just chopping away, doing my job kind of thing. So right, 60% chance that won't happen. Okay. And I can't lose any money, so that's also cool. Someone said something about lira. Okay. I can look at euro for you. We'll go to high yields. And, well, here's my Turkish lira. There's the short from last week. I know, right? Don't you turn your back on me! I won't be ignored! Boom! Roll reversal. Of course, what I was trying to teach you here, these little marks are entries, but they hadn't happened when I taught you. So anyways, I'm like, hey, look, this could be a pullback where you'd sell off the roll reversal. And same thing here and here and here. So I would have to do it one more time. And you would now do something like this. Okay. Cool though, right? Isn't that nice? Isn't that nice? It's pretty, huh? Look at that. Like, oh, look at it. Look at it. Cool. Yeah. So I don't remember where we started the month. This is just my trading account, or my training account, right? This is just the stuff you and I put together for educational purposes. I'm up 2,700 total, but I think we were only up 1,500. So I think I'm well over 1,000 pips for the month on my coaching platform. And by the way, and when I say that, I don't mean like lira pips, which are worthless. I'm just saying, if I'm up over $1,000 and I'm trading mini lots, because they're all mini lots, so that's 1,000 pips on a euro dollar, right? So I just dumb it down like that. So not bad. Doing little mini lots. Now, one of the reasons I'm doing this for you guys is over the summer, we had to have a lot of shorter term trades, but I did a lot of training about how that is not how to trade, right? That you will never get filthy stinking rich doing that. How many people remember those webinars where I specifically, probably a half an hour every single day, talked about scalping and short-term trading only will never, ever, 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 ever lead to truly a business, right? Like you can make money, but it's equivalent to being an hourly paid worker in a factory. Except you can lose money, right? You might lose your arm or something. But if you're going to get filthy, stinking rich and drive your yellow Lamborghini and drive and date people better looking than you better learn how to actually understand the market and all of that, right? Fundamentally, long-term technical. And we all know you buy low, sell high, and let your winners run. Everybody knows that. I bet you a 10-year-old knows that. Buy low, sell high, let your winners run, keep your losers small. Good. So that's what we talked about, and I said I'm going to do all these things. And then at that time, do you remember? I said by the time we get to the 3rd week of August, I want you to start trying to build a portfolio based on your fundamental analysis, and that I wish you to have a goal, because I can't make you have a goal. I wish you would have the goal of putting at least 20 trades together based on your fundamentals, right? Just slowly stack these trades up so that you have 20 of them. And I said, look, you'll put on 5 and 3 will get knocked out at break even. Don't worry about it. And then you'll put 5 more on, 3 more will get knocked out at break even. You'll put 5 more on, 3 will get knocked out at break even. But you know what? After a while, you get 6, 8, 10, 12, 14, 16, 18 trades, and you're in it to win it. How many people remember that? If you remember that coaching, say aye. Kiwi Swissies up. Right on, some. Cool. So you were listening. I appreciate that. So here's one example. So let's say I added 1, 2, 3, 4, 5. So I've added 5 trades that have made 1,000 pips. And I'm asking you to try to get 20. Do you understand that instead of 1,000 pips, you'd have 5,000 pips? Which is probably more than you ever thought was even possible. It might have been laughable if I said to you in July that if you just kind of if you focus on your fundamentals and focus on your long-term technicals and focus on trading like a professional institutional investor and actually build a portfolio based on fundamentals, that you would make 5,000 pips in a month. And you're like, dude, that's not possible. Nobody makes 5,000 pips in a month. And you're like, happens all the time, bro. You understand? Scalping won't do it. Right? So anyways, I hope at some point, even if this entire portfolio goes to 0, I want you to walk away with what I'm saying as a lesson. That you should try. You should have the long-term fundamental view. You should look at your long-term technicals. You should think like an institutional investor. And you should have plans or even strategies with a goal aimed at building a portfolio. Okay? Another kind of training I was giving you at that time is focused more like on the swap, right? So now, since May, this one trade is up almost 450% return on investment only on interest. That's only the interest. That's only the interest. So I want that to be like a mind-blowing lesson as well, because I told you I was going to do it. You guys understand? Like, I keep telling you what I'm going to do, why I'm going to do it, and then I do it. And then I come back and say, see, all those things we talked about, we're done, and they are gaining the things that I said you would gain. I hope you just totally drink the Kool-Aid and ask for another cup. Because what I've been also saying is, if you're only trying to get 5% better, you're going to fail. You need to revolutionize everything you think and know about Forex, which requires radical change and total departure from the old you. Anyways, right? Cool. So I'm glad you got all those lessons. Okay? Cool. So that's that. Someone asked about, maybe it was Euro Rand, and for some reason, oh, here. Okay. So this goes back to last week. We're still there, but it hasn't started. It's still my prices, but I don't like it as much. Okay. But this was the real plan right up in here, right? And so now, has it rolled over yet? No. It needs to prove to me that I should invest. Because remember, I'm the boss. So the market needs to prove to me that I should invest into Rand. Okay? So South Africa, get on with it. Entice me to invest. Okay? Weekly M3, I'm cool with that. Monthly M3, I'm cool with that. So what am I missing now? Oh, a reversal pattern would be fantastic, please. Right? So now I would drop into a smaller time frame and look for the up. So where's the support? Because remember, I got to break support, don't I? So this whole area looks pretty supportive. Okay. So you know it would be pretty nice on this one that might make me interested, is maybe we do this, we do this, we do this, we do this, and then I sell. Hiya. Hiya. Okay? And I'll get short on the weekly central, but on a rally. You know what I'm talking about? See? I know what my price is. Now the market needs to do its job and convince me I should invest. You know, you should almost look at it like you're a venture capitalist, right? The entrepreneur needs to come in and convince you should invest. And you're not even feeling like doing it. You're like, nah, I don't know. I don't think so. I don't think this is going to be a good meeting. Right? You're not even inclined on investing today. And the entrepreneur's up there pitching. So same thing, I'm like, okay, I get it. I can catch me some yield, but that doesn't look convincing to me. By the way, I have a tiny head. I have a tiny head. Spill coffee on my super expensive shirt. My wife's gonna kill me. Anyways. Anyways. Oh, I got tiny hands, huh? Tiny hands. All right, cool. All right, so that's that. That's cool. Let's go to the calendar before I forget. Lots of things going on. ISM, ADP, NFP. So hang on. I go to this thing called Forex.Today, y'all. Yeah, we'll get there. We'll get to gold, Stevie. Just hang on. Oh, that was a while ago, huh? Looks like this needs an update. What a pretty boy. Pretty boy. All right, calendar. Yeah, MXN. Yeah, Chuck, can you remind me in like when we're done this, and then we'll do peso. Thank you. Okay. Let us. Okay, let's do this. Tuesday. Aussie. Huh? Aussie. That's going to be a doozy. What are they going to do? I don't think they're going to cut, but I don't know anything. I think they want to wait till the end of the year. But that's just a complete total guess. Absolute total guess. I don't really care. My stops are at break even, so like I don't even care. Right? Well, Pro Trader says it's not the actual right. It's the forecast, not the actual result. Well, it's the differential between the two that matters. Russell says they are cutting. All right, all right, all right, all right. Well, then I'll probably break even. Okay? So I took a shot, can't lose money. That's how you get paid. Is that right, Cash? Gee whiz, yeah. I thought maybe there was like a human sort of element of hanging on until the Chinese and the Americans figure it out, but they don't. Also, the Chinese manufacturing data was pretty bad still. It was better than expected, but still bad. So I guess I see their point. It feels sad. Like, I feel really bad for Australia. Going below 1%, I mean, wow. What a weird world we're in. All right. Well, invest all your money in India, I suppose. All right. Okay. Well, then we got marketing, manufacturing data out of Europe. That's going to be really bad, of course. They're expecting contraction. So when you expect contraction, no good, right? Canadian GDP, that's going to be interesting because we're seeing how they're hanging on. Okay. And then manufacturing PMI. Well, we're in this trade war and stuff, so, we're expecting above. But here's the thing. The reason the U.S. economy has not crashed during this trade war with China, because that hurts manufacturing, hurts farmers and manufacturing, right? But manufacturing, I read somewhere recently, is 7% of the American economy. Sav says India will cut soon. Yeah, that may be true, but the reason I say like invest in India is like China wants to create a domestic economy like the United States. That's what China has said it wants to do. That's what India has, actually. India has a domestic economy. Yeah, we're at almost 10,000 now. Thank you, Badal. So anyways, you see what I mean? So India has a domestic economy. So anyways, I find that very interesting. So when there's a recession, China goes into depression. India just goes on being India. And growing. And young, too. The other thing, right, Sav? So I've been saying it for years. India is the future. It's it's a democracy already, which is okay. I'm not convinced democracy is the winning political model, but I'm convinced capitalism is. And every Indian friend I have is definitely capitalist. Maybe it's just because they're my friends. But Indians are good business people. Kind of tough to deal with sometimes, but good business people, right? And so China has had to become capitalist and learn how to be a capitalist because they had 50 or 60 or 70 years of not being capitalist, and Indians have always been capitalist. So, and they have a democracy, so, hey, right on. And a domestic economy. So and by the way, I don't know if you've been to India or not, but there's no infrastructure in India. You're right. You walk out of the airport in Delhi and you're on your own, brother. Good luck. Welcome to India. Good luck. Right. So you can totally invest everywhere in India. You go to China and everything's brand new and beautiful, and everything's been invested in. All the roads are new, all the train stations are new, all the airports are new, all the ports are new. Everything's new, right? And you're like, where do you put your money in China? Well, all that money's been pouring in there. That foreign direct investment's been pouring into China for 25 years, and India's ready. There's no infrastructure in India. I've been I'm not saying no, but I've been to some nice airports in India. But I've also been to some airports in India that were from the 1960s, right? So like, there's opportunity in India. Faux show. Faux show. Anyways. All right. Yeah, moveon.com. So 7% of the economy is manufacturing. So do I care? Not really. Okay, great. What I do care about is ISM services. And I love ISM services on a Thursday. I'm disappointed when it's on a Friday, and I really despise when it's on a Monday. So this is fantastic. Now we're missing some news here, aren't we? We're missing ADP, for example, and stuff. So let me put this back to medium and double check our work here. German unemployment. Okay. Look at this. European unemployment, 7.4. But like I said, that's just a consequence of their economic, political system. So that's not surprising at all. But amazing, right? When the United States is at like 2. Wow, amazing. And I think like if you go to Spain, for example, let's pick on Spain or Portugal. You go there and you're like, what's the unemployment rate for a 30-year-old male? And then you're like, what's the unemployment rate for a 30-year-old female? And it's just amazing. Or 25, right? And you're like, wow, super high. Because you never get fired from your cushy European job, right? So people get their job and they sit in it forever. And there's low productivity because the old people are taking all the jobs and there's no incentive to work harder. They just counting the days to retirement. And there's no work for young people that want to hustle. So anyways, there's the consequence. Okay, so RBA we did. Get to Wednesday, ADP. Okay, ADP is very interesting. Fundamental impact. It's actually a nice way to kind of gauge small businesses and medium-sized businesses. Like think about who uses ADP. Businesses that can't afford a payroll department. Looking at comments here, Michael says the caste system in India may be stunting India's growth. Yeah, and religion also, I also think, shouldn't be mixed with politics. They certainly do it in the United States, even though they say there's a separation of church and state. That's nonsense. So I think that in general, religion and politics should not be mixed. So I think, but India is moving in the right direction, has been moving in the right direction for a very, very long time. That's true, Jimbo. That's true. But imagine you are so unemployable that for 3 years in a full employment scenario where everyone is desperate for employees that you still can't get a job. So we call that and I talked about this, I don't know, probably 3 or 4 times already, but I can do it again. There's something called the COLA model. And what it does is it tracks the number, and this is some sort of chart, and I forget what's on the chart. It's like number of open positions and stuff, right? So you have like the number of open positions, and this looks at the job posting data. What is that? There's a job economic release that gets posted, and it has to do with number of job postings, whatever it is. Flash, is it? Flat? Anyways, so this COLA model looks at the number of jobs available in the market, and then it overlaps number of people trying to get these jobs. Okay, and this is what it typically looks like, where there's some sort of overlap, and they're usually close but no cigar. So again, number of jobs versus number of people looking for jobs, right? And then all of a sudden, since the last financial crisis of 2008, there's something like looks like this now. Okay? And even though this makes no sense, and I haven't labeled my chart, and the reason for it is I can't remember, the point is, what this is telling us is that there are jobs available. I wanted that to be blue. There are jobs available. Come on, I'm trying to get this right. Okay, this is telling us these jobs are available, and these people are looking for work, and there's no match for like the first time ever. No, not COLA. It's more like COLA. I don't know if it's KOLA or COLA or something like that, but you'll have to Google it. Okay? But for the first time in a long time, of the people that are looking for a job, and this goes back to Jimbo, of the people looking for a job, they just don't have the skills. They're unemployable. It's not that the market won't absorb them. They can't add any value. Okay? This is not what the market needs. Okay? So there's one thing that you could do here. The government could look at this and step in and say, we need to retrain all these people in pink and move them up here and teach them blockchain and teach them artificial intelligence and stuff. Okay? But typically what would more likely happen is this population will just die naturally, right? They'll just die over time. And people in university are getting jobs that teach them blockchain and AI and stuff, and there'll be a match again. Okay? But the people in this economy that are looking for jobs and still can't get a job, there's just no need for them in the economy. Right? So like, learn how to drive a truck. Learn how to be an electrician. Learn how to work, mow lawns or something. Learn artificial intelligence. I told you that a friend of mine, she had a really high paying job for a very, very long time. She got bored with it, so she went to Stanford and got a certificate in artificial intelligence, aka statistics with a whole bunch of calculus in it. So she banged that out. It only took her a year, maybe more. Only took her a year and a half of hard work of raising her young children, having a good job, right? Being a wife, and then banging out at Stanford University an AI degree in only 18 months. Okay? Good. On the very first day she was done, Apple hired her. Done. She retrained herself. So any one of these people, okay, let's do this in gray now. Any one of these people, can simply retrain themselves and get these jobs. Okay? Or the government could step in and say, there's no value you can possibly add to this economy, so we will retrain you. Okay? Now, of course, the government does a terrible job of that, right? But that's one thing. If you were Sweden or Norway and you have a really small economy and with a very small population, you could do that. Okay? Yeah, exactly, Jimbo, if you have the time. Or you're just totally unemployable. That's really it, guys. Right? If you are looking for a job for 3 years in the United States and nobody wants you, there's a big red flag. We're at full employment, and companies are trying to hire people. So if you don't have if you don't have a college degree, or if you don't have a trade skill, you got a tattoo on your face, hey, that's your choice, but you're not going to work at the Ritz-Carlton. The Ritz-Carlton might be hiring, and they're like, dude, you have impeccable resume and stuff, but that tattoo on your face is throwing everything off, right? So there's some big red flag why you don't fit in this economy. So this is a free world, though, right? You can get on a plane and go to China or something. I don't know if that's true. You can get on a plane and go somewhere and work or something, or learn how to trade Forex, for crying out loud, or something, right? Like, there's something. But it's a big, massive red flag if, right, and like someone put in their structural, right? Yeah, like there's no short-term fix. Okay? Okay? Especially if you don't have the means or the attitude to say, well, I'll just bang out a degree in a year and a half, retrain myself, and go get a better job. If you don't have that capacity or ability, then once again, you're limited in a very, very modern economy with very high-end jobs. Like, I'm telling you, you want a $300,000 a year job in the Silicon Valley? Pay Stanford University $50,000. Work your butt off for a year and a half, and if you don't know calculus, better take some calculus courses first. And then in hardly any time, you'll be qualified in artificial intelligence. Or there's a course at MIT that'll teach you blockchain. It'll only take you, I think it's less than a year. And now you'll have a certificate, and you'll have more than most people have who work in the blockchain industry. Go get a blockchain job. It's like, it's that easy. But you're like, dude, well, I don't have the money, or I don't have the time, or I don't have the educational background to even be able to do that. I can't even see myself taking online classes, getting a certificate from MIT. It's just not my wheelhouse. And I might say, well, maybe that's what's leading to your structural unemployment. So retrain or move. Now, Europe has faced these problems too, where some jobs are going this way and other jobs are going that way, and it's very disruptive and very disturbing to the actual people in the moment. But when you look at the aggregate, it works out, right? So it might suck for you, but when you talk about the whole country over time, it works out. So anyways. So cola, I don't know who did it. I mean, I can try it. I can do it this way. Cola employment model. I don't know. That doesn't exactly cola. No, cola indeed. No driver jobs employment cola. No, you're going to have to look it up. Something like that. Jobs, Coca-Cola. No. Employment model. That's kind of there. Coca-Cola, long distance relation. No. And I don't know who does it. It might have been the Fed that does this. It's some stupid Harvard thing that it did. So anyways, Google it. It was one of like 10 billion things, right? Cool. Yeah. So retrain yourself, learn how to trade Forex, right? And you're golden. All right. And then NFP, obviously, right? So ISM. So it's going to be a good week, guys. It's going to be a really good week. You can take a quick look at the commitment of traders report. I'll just do euro. Okay. I'm only looking at net here. Slight increase. So we're looking at less, you see this? Less bears and less bulls, but less bulls than less bears. Isn't that interesting? The net position changed. So there's less bears in the market, there's less bulls in the market, but there's less bulls, which means more. And a slight, I mean, no real, I mean, yeah. This here, I don't know if you can see it. This here, this is the value of the euro dollar. This is actually the euro dollar price. Okay. Okay. So I'm not looking at that. What I'm looking at is this is down and this is less down, which makes it go up. So let me ask you this: according to this, are there more bulls? No. So last week, for example, because this is backward looking, last week euro may have been a little bit strong. Okay. Or certainly less weak, maybe. Okay. Now, if that's true, if the euro was at least less weak than it has been, or maybe even a little bit strong, was anyone actually buying the euro? And the answer to that is no. There's just less bears than there were before, and there are less bulls as well, but the negative change in the number of bulls was less than the negative change in the amount of bears, so that pushed it up. Isn't that interesting? That's how you use the Commitment to Traders report. You can analyze, even if the euro dollar goes up, you can analyze and say, well, is it people buying the euro? Right? And in this case, euro might have been a little bit strong versus the dollar, but it wasn't actually people buying euro. It was just less people selling euro. So anyways, neat, right? All right, so that's that. You can check it out whenever you want. I guess I have to find out why the homepage isn't updating. Cool. Beep. How do you read the COT report? Okay, well, I can teach you. And where can I find that graph? I just typed it. It's Forex.Today. So you're on the Forex.Today YouTube channel. So that's a big hint. And now you can go to Forex.Today. Got it? Otherwise, if you have to make me type the whole thing in, http://forex.today. Forex.today. Forex.today. Okay. All right. La 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 la. What do we want to do? I guess we got to do the peso. Thank you. Got to do the peso. Okay, so here's the plan. So this closed even higher, so we created this plan when we were way down here. And I can tell you that's the case because I would have been looking for a plan A off of the monthly central, but because price kept moving up, doing a high close, which is part of the formula, the high close moves the central pivot. So the central pivot is moved from about 1968 when I created the trade plan to now 1973. So we're up a few more pips, okay? The plan is still the same. So let's go to the 4 hour and find our lines, okay? So now I would do something like this. I have to update this plan. Plan A would look something like this. Okay. Now, the funny thing is, maybe we're creating this double top now. That might be the case. Let me adjust this now. Okay, so that would be the current plan. Let me get rid of this. And that's a little distracting too, so I'll just get rid of that. I gotta grab this one. Look at all these wonderful plans we had. So if that makes it easier, let me do it this way. Maybe you'll get the idea a little clearer if I do it this way. Okay. Now, it's not going to go straight down like that, of course, but I'm giving you this idea where the double top, and then look for the 1, 2, 3. Okay. Bias towards the swaps. Actually, this is not a swap. Okay, this is not a swap trade. If I was doing a swap trade, I wouldn't be trading against USD Mexican peso. This is a flow trade. Okay, so this week, about $2.65 billion is going to move from the United States to Mexico. It's a Forex trade. 2.6 B will move from the United States to Mexico, which means 2.6 billion US dollars will be sold simply to purchase Mexican peso. So if the dollar happens to be weak anyways, you get to see a nice little effect. So let's say every other currency in the world weakens the US dollar this week. That'd be perfect timing. Just as the Mexican peso gets strong, well, then you would see downward move. Okay? And that's what this, so it's not to capture yield. Okay? It's simply flow. Now, this works really good when you're in an environment where the dollar is weak anyway. So the dollar is weak when the economy is doing really good. Okay? A weak dollar is a very, very good thing. So you can imagine once a month, you have this opportunity to have a flow like this. Fantastic. But we are not in a scenario right now where the dollar is generally weak. The United States is cutting interest rates. Okay? Let's put it this way. Let's say you were going to make an investment. 100% chance you were going to make an investment. Okay? And you had to choose. If you made the investment today, you'd get 2% guaranteed. But if you waited a few months, you'd only get 1.5%. But nothing else is different. Would this entice you to do the trade now? Or the investment? Maybe you're buying real estate. Maybe you're buying a bond. Maybe you're converting your currency to go on a trip somewhere. And you know, let's say your trip is in 6 months, but you know the currency is going to be more expensive in 6 months. So do you start buying it now, or do you just wait? So that's my point, is You've done the analysis, you've done the work, you know you're going to make the decision. You're going to go on your European trip, let's say. But you also look at the markets because you're a currency trader and you say, well, the euro's going to go up in value between now and when we go on our trip, so I should buy the euro now when it's cheap, right? You see what I mean? Well, the same thing is happening in the bond market. When yields fall, and let's say your belief is that it's guaranteed to go from, that the interest rate will fall in the United States. Let's say that's your opinion. I know these numbers don't match up. I'm just giving you an illustration. So you believe 100% chance interest rates are going to fall. Well, another way of looking at that is in the bond market, you buy a bond. You buy it. You actually have to buy it. For example, you loan somebody, in this case a company, you would loan a company $1,000. That's the price of the bond. And then in exchange, the company might pay you, let's say that 2%. And at the end of the period, you get your $1,000 back. Okay? Now, someone could do some time value of money calculations and say, tell you what the value of this $1,000 is. Okay? They can add up how many payments you're going to collect over the period of time, plus you get your 1,000, then they'll discount it over time, right? And then they can come up with a value of this. And the value might be more than what you paid. It might be 1,058, or it might be 958, depending on the scenario and the situation. There's no dot there. Okay? But I'm just saying that these bonds have prices. The prices change depending on if people are buying or selling. What doesn't change is the 2%. Okay? Now, let's say you were going to buy this bond and you thought that between, let's say, now and when you're actually going to make the investment, you thought the same bond in 3 months, still $1,000. Okay. By the way, we're doing behavioral finance if you want to impress a good-looking person. And they're like, how's that Forex thing going? Oh, we studied behavioral finance today. Oh, really? You're such a wonderful person. I want to be with you. Buy me dinner first, baby. All right. But you thought for sure the interest rate was going to change to 3%. In the period that you were going to invest anyways. Let's say over the next 6 months, you're 100% sure you're going to buy a bond. But you're like, you know what? I'm looking at it and I'm certain bonds are going to pay 3%. What do? It's the same $1,000. It's the same company or country or whatever. And it's the same horizon that you were going to buy, same duration. The only thing difference is if you wait a little bit, you'll get 3%. What do? Well, here's the thing, Siegfried. Bonds are fixed. That 2% is 2% forever. It's a contract you're making with the company or the country. Okay? So if you lent Ford Motor Company money and they say, okay, we'll do a deal with you. You give us $1,000, we'll pay you 2% interest, and at the end of 1 year, we'll give you $1,000 back. Okay? That never changes. Even if Ford Motor Company 2 months later issues the same contract to someone else, and they're like, but we'll pay you 3%. You don't get a raise just because someone else got a raise. Okay? So here's the behavioral finance. And by the way, let me restate a sort of an unstated rule. If I ask a question and you're listening and you're pondering, and I ask you a question, right, and you're thinking about it, and you don't know, please type in a question mark. Because when I ask, 163 people a question and 4 people respond, I just assume no one's listening. But if you don't get it, I need to know you don't get it so I can help you get it. Because maybe you've never done behavioral finance before. Cool. Behavioral finance is predicting what people will do before they even do it. It's kind of like currency trading. Okay? So, here's the thing. If you were going to make an investment over the next 6 months and you picked your company, let's say this is a corporate bond. And you're like, I'm going to invest $1,000. They're like, I found my company, I know how much, but I'm pretty sure my research tells me that if I wait a little bit, I will get 3%. So you wait a little bit. And sure enough, they raise interest rates. Okay? So you buy this. Now you've done a deal, you've got a contract with the company. The company says that you're lending them $1,000. They will pay you 3%. You'll get a payment every 6 months. And let's say this is for 5 years. So every 6 months over the course of 5 years, you'll actually get 1.5, half of your 3%, 1.5% of your $1,000. You can figure that out with the math, what that payment's going to be. And you'll collect that over the course of 5 years. That's a cash flow now. Plus, at the end of 5 years, you'll get $1,000. But now you have to discount it because you could have done something else with the $1,000 that made you money faster or something. And so you have to see if it's worth it. But what about the idiot that did the first deal before you and is only earning 2%? That's a fixed contract. Now they can sit on this, ride it out, collect the 2% or 1% every 6 months until it expires, let's say in 5 years, and then they get their $1,000 back and the contract is expired. If they don't want to wait that long, they change their mind, they can sell that bond to somebody. Now let me ask you, when any person, any living, breathing soul can go to the market and buy or get this deal at 3%, has the value of this one that pays 2% gone up or gone down? By the way, if you're listening and you don't know, type in a question mark. What happens to the value, the price? This is still a $1,000 loan to the company. It still collects 2%. Nothing's changed except its market value, what people are going to pay for it. Well, so here's the thing. I can take that off the owner's hands. But when I can just go straight to the company and get it at 3%, this person's going to have to discount it. It's just not worth as much. It's kind of like a used car. You see what I mean? You're like, oh, well, it was $50,000 when it was brand new. And you're like, well, it's 2 years old now. I think I can only give you 28. They're like, 28? Okay? Yeah, the value of this has gone down. So if this person wants to sell, they're going to have to come down. Now, the cool thing is it's math, and you can figure out exactly what this is worth, like $958.22, right? Like it's just math, time value of money, and some discounting and opportunity cost, and all that kind of stuff. And that there's a price. It's really cool. But the thing is, its value has gone down. Now, what if this was not? Let's do the reverse now. Okay, let's do the reverse. Let's say the central bank is currently paying 3%. Okay, so let's mark this and do it in a different color, blue. Okay, this is today. Okay, but on the next meeting of the central bank, you believe they're going to lower interest rates. Okay? Now here's the interesting thing, right? They're borrowing money from the government. I'm not talking Fed funds trading amongst banks. I'm talking about bond, in this case, treasury investors. See, when you invest into treasuries, you are lending the government money. So it could be the US government, it could be the Canadian government, it could be the Australian government, all that kind of stuff. So you know right now you can lend the government $1,000 and they will pay you 3%. Guaranteed by the taxes they collect. And of course, in the United States, even if they can't collect the taxes, the Treasury can print money and give you the money anyways. You will get some sort of money, right? So, but you are convinced, 100% convinced that at the next meeting they're lowering interest rates. So, do you invest today or do you invest later? Once again, we're talking behavioral finance. Isn't this nice? Do you want to earn 3% today or 2% tomorrow? You want to do it today. If you wait, you will earn less. Now think about this. Let's say you bought it. So now you own this. Okay? Let's delete this. Okay. So now you own this. You own it at 3%. So let me change this. Okay, so now you own this. You own a $1,000 bond plus the 3% cash flow or over the period of time. Okay? Then there's a cut to 2. Okay? And let's say you change your mind now. You're like, nah, I don't really want my money locked up into this treasury for 5 years. I think I can do better. I think maybe I can invest into real estate or the stock market or maybe another country, maybe a commodity. You're like, 3% is just not enough to pay me for the opportunity cost, right? Because if let's say you thought you could earn 4% somewhere else, you see what I mean? Your opportunity cost is higher than what you're being paid. So you're like, you know what, I changed my mind. So you decide to sell it. So you go to the market now. The market could go to the government, lend the government money directly and earn 2%. Or they can buy yours, same amount of money, but yours earns 3%. What's happened to the actual price? Is it $1,058, meaning it's gone up from $1,000? Or is it lost value and gone down to $958? Has prices gone up or down in the bond market? Yeah, this bond would earn a premium. People would be jumping all over each other to catch the higher yield. So here's the thing, you listening? Real interest rates, well, real isn't the word, but let's say market interest rates have gone from 3 to 2, but prices have gone up because people are trying to lock in today before it gets cut. Then if you think it's going to get cut from 2.5 to 1.5, you're going to buy today because you know it's going to be cut to 1.5 and you know you need to do the deal, so you might as well do the deal now. So you see, when the Fed cuts interest rates, all of this, if foreigners are making these investment decisions, they need to do it with dollars first and then lock in the higher interest rate before the Fed cuts. So the dollar gains strength when the Fed is cutting. Typically, the Fed cuts when the economy is bad. So it's a little bit of a conundrum why they're cutting right now, but it doesn't matter. They cut. They're forcing investors to get in now. Okay? When the Fed stops cutting interest rates, it signals to the bond market that they don't have to play this game. Like, basically, you're front running, right? And the bond market rally will probably simmer down. And then maybe the stock market can move to the next wave up. And the dollar will weaken because the U.S. stock market will be too expensive because it will be at all-time highs. So people will say, well, I got all this money and I don't want more exposure to the stock market. So I think I'll invest into India. Okay? And that means the US dollars leave the United States and they get converted into rupee. Okay? So this is all priced before the announcement. The thing is, you know you've made an assumption. All investing is based on what you believe the future is going to be. It's called future expectations. Why do you buy real estate? Because you believe in the future the value will go up, or the young neighborhood will grow into a flourishing neighborhood, right? Why do you buy a stock? Well, you think the stock price is going to go up. Why? Well, they make good products, people like them, they seem to do things, they seem to be profitable. Okay, good. That's all future expectations, right? So the same thing, like, now the Fed tells you, right? And you can do some research and say, well, there's a 72.3% chance the Fed's going to cut interest rates next week, so I will buy this week, okay? So yeah, it's just your investment decision process. And we all do it, okay? Now, as consumers, we're stupid. Okay, businesses and institutions are smart. Individuals like you and I, we're stupid. We go to a car lot and say, which car will depreciate less? And we make our big decision. Or even if we're more stupid, we don't even care about the depreciation, right? So it's not either way, it's always a bad decision. Businesses, they think about how much money they will make. And then they compare how much money they will make versus other opportunities to make money doing other things, right? And that's how we're supposed to actually think. So I gave that speech last week about that wealthy people get free Lamborghinis. And poor people lease them and spend the money they earn from their job. That's what a poor person does. A wealthy person invest into real estate that produces cash flow, that also has asset appreciation, and this money just comes in every day, every month. You don't have to do anything. You don't go anywhere. You don't check into an office. You don't do anything. It's just money that comes in. And after a while, you buy all your regular toys and pay down all your debts, and this money just keeps showing up. You're like, dang, all this money. So then you're like, oh, I've always wanted a Lamborghini. So you go to the Lamborghini store. Now you lease your Lamborghini. Costs you $2,000 a month. But your real estate investment pays you $5,000 a month in profit. So what happens is the renters, once again, the poor people, are paying for your Lamborghini. So what I was trying to say is only poor people spend money on a Lamborghini. Wealthy people get Lamborghinis for free. In fact, they get poor people to pay it for them. That's same thing with the bond market. You should look at these investments like you will get your $1,000 back, or you need to be compensated for that risk. Plus you will earn an income, right? Plus there's some value. Money in your pocket today is worth more than money that you are supposed to get in 5 years. We call that inflation. There's also risk and all that kind of stuff that you need to be compensated for. But you own something that pays you money, okay? Because when you own income producing investments, you don't have to work. Okay? What's the cumulative hours I worked putting together this portfolio? Half an hour? And it makes me money every day, whether I do anything or not. Okay? So you want income producing assets like bonds, and then if you see that the cash flow changes, meaning the interest that you collect is reduced, the value of your asset is reduced. Okay? But we need this in your trading. You can't all just be scalpers. Just every day you do the London Open on a 15-minute chart. It's never going to work. Okay? That's like a job. And then, God forbid, what do you do then? You take money out of your account to buy your yellow Lamborghini. Now your Forex account's smaller, and that's terrible. What a terrible thing to do. Right? You should do something like you will build a portfolio that pays you $2,000 a month in interest payments. That's all it does. You don't even care about the pips. As long as you're above break even, The pips are for later. But as soon as you can collect $2,000 a month in interest payments from your portfolio, go get your Lamborghini. And that just comes out of your interest payments. Okay? Okay? It's cool, right? Chuck Duck says, my confidence in the Mexican peso trade this month is not strong. Is the dollar strong? If the answer to that is yes, then my confidence is waned or has waned. If I believe the US dollar is fundamentally weak, I don't mean weak today, I mean whatever, but if it's fundamentally weak, then my confidence is stronger, is better, I have more confidence. Okay? So I just explained how the bond market works and why, and just in the case of the United States, by the way, why the dollar strengthens when interest rates come down. Now, when you go to college and you take your classes in economics and they explain the foreign exchange market to you, they won't tell you that. They won't give you the lesson I just gave you. And then you'll say, Professor, I think you're wrong, and then you will get punished. It's happened to somebody I know. One professor told me when the dollar gets strong, gold gets strong, goes up in value. And I'm like, Professor, yes, Wayne, that's wrong. Oh, this camera. That's wrong. The gold prices go up when the US dollar loses value. And he's like, that's not true. And I'm like, but it is true. And he's like, that's not true. And he's like, it is true. I'm like, it's not true. He said, well, when there's more money, there's more demand for everything. So therefore, the value of everything gets pushed up. So including gold, demand for gold. And I'm like, that's not true. And I lost that argument. Yeah, I lost it. So anyways, yeah, I lost that argument. Seriously. I'm like, everybody knows gold is the anti-dollar. No, it's not. So anyways, I lost that argument. So does this look like a sure thing? No. No, it does not. Is it worthy of a shot? If it proves to me I should take the shot. See, I put the burden on the market. I'm like, market, I don't think you have the guts. So prove it to me. 5-8 cross down would be good, but I'd like to see a breach of the 21, don't you? Or, like, how about this? Let's go back into history and say, what happened last time we had a similar opportunity? Well, you could have waited for the 2155. Well, you can see that they're actually diverging. So the MACD, you should be able to draw this. The MACD is above the waterline and rising. Okay? Or I can take a shot here. Isn't that very similar to where we are now? So let's delete this and say, let's say that's where we are now. And this is what I'm looking for. That's kind of what I drew. Oh, right? Oh my God, that makes sense! Okay. Daniel, I don't know. That was our trade plan at the time. Probably the psychological level. I think there was a monthly pivot, a psychological level, and I spent like a week and a half training people on how to do it. So I just did it. Well, that's kind of what I said, Sav, right? Where like I need a lower low, lower high roll reversal, otherwise known as a 1, 2, 3. 1 is the double top. 2 is the lower low. 3 is the roll reversal. Okay? So, because I'm not confident, it will have to prove to me. It will have to give me the confidence I need to make the right decision. So I'm going to wait. I'm not going to risk money on a pissy little 2.6 billion dollars. In the Forex market, that's not even a chunk of corn. Oh, thank you, Daniel. It's just a trade, man. It's just a trade. It's just a trade. I've long since given up the vanity of like pride in trades. It's not me at all. It's just the market. It's just technical analysis. There's almost like no value to it per se. I mean, it makes value obviously, but how do you say it? Like it did what it was supposed to do. It's like, reading to kindergarten kids and they're like, wow, you did such a good job. You're like, yeah, actually this was really simple and straightforward, right? So I don't know. I'm not saying it's simple and straightforward. I just I know it. Right? I know and it was supposed to do that and it's doing that. So, but it's no big deal, right? I think you'll find over your career, guys, once you figure out how to trade properly, right? Like that requires a big shift in mindset, okay? Just to learn how to trade properly. And mostly because you've probably been mistrained by some, idiot in the past. So we got to fix all of that. Sometimes that takes years to get your head screwed on straight. But once you get all that together, it's some basic technical analysis and some other basic stuff. And entering trades really isn't that complicated, right? Like I'll give you an example. An uptrend is up, down, up. Guess what do you do next? I mean, dude, it's not that hard. Where it gets more difficult is exiting. Exiting isn't easy. Okay? Exiting is not easy. And that's where most of the discipline comes in. So I teach you guys to be disciplined. And I say things like, be at the market right when this opens so that you can create this trade plan here. Okay? So you have to do that. You either can do it or you don't. I don't know what it is. Okay? Right? How many times have I told you to be here when the market opens? 100 billion times. So you either do it or you don't. And of course, we know most people don't do it. It's too difficult to walk away from the TV for 20 minutes to put some trades on. I don't know what it is. But the next thing is, if you can do that, that's a very basic level of discipline, right? Okay? It's right up there like brushing your teeth before you go to bed. Okay? Not mind-blowing discipline, just sort of like common sense discipline. Now, the real tough discipline are things like getting out of a winning trade because you hit your target. Because I'll tell you, a little bird sits on your shoulder, or a little angel, or maybe a little devil sits on your shoulder and says, but it might keep going, but you're just supposed to have the discipline to get out where you're supposed to get out. I mean, you're not supposed to have all those things, right? So getting out or staying in based on your plan is also requires an amazing amount of discipline. Okay? But entering your trades, and I've always said this, entering your trades based on solid, sound, fundamental, and technical analysis is super ridiculously easy. It's just going to take you a few years to get the skill together and stuff, but you don't have to be a rocket surgeon. Okay? Now, the next 20 or 30 years, you're going to always continuously be working on exiting trades at maximum profit, maximizing the efficiency of your risk management. That is, it's almost like rating poetry. Was that good poetry or bad poetry, right? Very highly subjective. Okay? Well, pivot points are just leading indicators. So, yeah, they're important. Okay? There's nothing more important than a bias. You don't have a bias, you will lose your money. If you have the wrong bias, you'll probably make money. If you have the right bias, you'll probably make a lot of money. You don't have a bias, you will lose. I will destroy you if you come up against me, because I don't know who you are when I'm trading. I can't see if it's you, friend or foe. All I know is when I buy, someone is on the other side of my trade. And if they don't have a plan or a bias, I will destroy them. It's not even fair. And I have no sympathy or empathy. None. Okay? Someone's got to lose money so I can pay Harvard. Right. Right. It doesn't go to me. Yeah. So someone's got to lose money for me to make money. And that's how it goes, man. And I don't really care. Because I put so much work and I put in so much dedication and so much sacrifice and I exhibit such amazing discipline that I deserve it. That's how I look at it. I deserve it. Because I protect my discipline. Right? So yeah, the sick, the sick, the weak, the old, not my problem. Well, that's simply your plan, Michael. That's simply your plan. And that comes down to fundamentals more than swing trading. Okay? And by the way, you're asking a question like knowing when to carry trade and then not exit out a target? No, there's no training course for that because I don't know either. Nobody ever knows. That's the thing. When you become mechanical like this, like you're like, okay, check, do I have this? Check, do I have that? Check. That never works, by the way. This mechanical idea, this is why EAs will never completely make you wealthy. You still have to do some of the work yourself. Okay, you can't check off a list, okay? It comes down to a judgment call. Your EA is not thinking about fundamentals. Your EA isn't thinking about seasonality. Your EA isn't watching government reports and such, right? Your EA is only looking at whatever is in the algorithm. So, there are times when I long, let's say, yen pairs, and I'm in it for a week or two. Then there are other times I take the same long on the same pair, maybe even at the same price, but because it's a different time of year, I'm either only expecting to be in it for a day or 3 months. But these are all just my plans. These are just plans, right? But the interesting thing about it, and that's why I say like entering trades is super ridiculously easy. Whether I'm in it for 3 hours or 3 months, it's the same entry technically. I'm still going to have a plan A and plan B. I'm still going to be able to buy at support, right, on retracements and stuff. I'm still going to buy low. I'm still going to have proper entries. I'm still going to use moving average crossovers, oscillator crossovers. I'm still going to use daily pivot points, weekly pivot points, monthly pivot points, all these things. It all gets put together and it's the same plan. So this is why I'm trying to tell you, if you're focused on being in trades for a half an hour, it's the same amount of work as me being in a trade for 3 months. Except you have to reinvent your trade again and again and again and again and again. It's the same amount of work again and again and again and again and again. Where I might do it once, if I get knocked out of break even, I'm like, yeah. But if I get it, because my fundamental and technical analysis was correct, I catch this trade. Now I'm in it for today, I make money, and tomorrow I'll make money, and the next day I make money, and then the day after that I make money, and then I get paid for over the weekend too. It's true. I get paid for holding trades over the weekend. I get paid on Wednesday, but whatever. But I still get paid 7 days a week. And then Monday I make money, Tuesday I make money, Wednesday. Because I always make money if I'm collecting yield too, right? Now, most yields are really small, but I'm still making money. Doesn't matter. If I got my stop at break even, I get paid no matter what happens, no matter what I do with that day. And this is what I'm trying to teach you. Be big. Think like an institution. Okay? My example several weeks ago was like, why would you lease a space, lease an empty restaurant, hire an executive chef, come up with a menu, spend money on decorating the place, hire and train staff, do a whole bunch, spend money on a whole bunch of marketing around your town, and then the day before the grand opening, you go out and you buy a bunch of food. You're out there 3 o'clock in the morning buying food so that you have everything. And then you sit there and you pray people show up. Let's say people do show up, and your month goes by and everything's great. And then at the end of the month, you shut everything down and walk away from the restaurant. You leave all the decorations inside. Yeah, all the addresses, your address will change, your phone number will change, your website will change, your menu's going to change. You've laid off all your staff and your executive chef, so all that's going to change. And you're going to go look somewhere else in your town and open up a completely different restaurant and repeat the whole thing. And you have no loyalty from your customers because they don't know where you are now, and you have to start your branding and promotions all over again and spend money on all the new decorations and train all your staff. You know, like, what? That makes no sense business wise, right? Once you set things up, it's about repeat business, right? In this case, that's what Forex should be like. If you get into a trade, you did all the work technically and fundamentally, you got in a trade, you're actually making money. And then a half an hour you get out? Why is that smart? Like, what do you mean you got out? You were making money. Yeah, well, I was up $22. Like, what? Right? What are you talking about? Okay? All that work for that little bit of money. And then, of course, we all know what happens is people start to get confident because they think they're really good. So they start throwing down a bunch of these 22 pip trade or $22 trades, and then they decide, well, I'm going to make my lot size bigger because I'm so good. I want to make 220 instead of, right? I want to make 10x. So anyways, you go much bigger lot size and you blow up your trading account. You destroy 10 good trades with one bad. Plus the next 10 trades you're going to make are just getting back to break even, which never works either. So anyways. Okay. Make money while you sleep. If you can't make money while you sleep, by definition, you are poor. Wealth is having your money work for you. Wealthy people, they get fat and lazy. They sleep in their Tempur-Pedic beds. They wake up at 10:30 in the afternoon, have lobster and champagne, and take a nap before lunch. And they made money doing it. Okay? And I bet you're smarter than they are, so you deserve it, right? Only if you put the right actions behind it. I think we covered most of these. Gold. Oh, we should do oil. No, nothing going on yet. I think we said around here 53, right? 53, 54. We're still waiting. It's still coming down, so it's moving the pivots. Today is the last day. Tomorrow's the new pivots. So it's still calculating the entry for next month. So because we lack trend, we're not aggressive getting into something that lacks a trend. So we started the month here. Open. Low. Actually, I meant to do it this way. open, low, high. Now we need the close. Okay? And it looks like we're going to close around here. Okay? Now if it closes down here, this pivot and this pivot are going to move down. If it spikes up, then it's going to move it up. So all I know is most likely somewhere between 55 and 54. If I'm a bull, I probably want to get long. Okay. I also am nervous about it because, you know, it's quite a bit of volatility. Okay. This is vol. Vol is bad. Does your trading track record look like that? Right? Does your account say you had 10K, right? And then it was 15K. And then it was 9K. And now it's 11K. Does your track record look like that? You will never, ever, ever, ever attract an investment. You will never attract money. Maybe friends, families, and fools, granted, but no one would ever give you money. Have we done gold? I thought we did gold. I might have done it briefly, but casually. But yeah, okay. Okay. What do you think? If it's going to go up, okay, it should go up around this price. Okay, probably an S1, R1 week, leading to an M2, M4 month. So that means up to here. Hey, look, that's basically the M3, right? And then I'd probably say down and then up. If I was a bull, I'd be thinking that. We already know we're at resistance. I mean, we've discussed it probably 5 times in the last week or so. Okay. And if you're a bear, you sold it high already. And we talked about that as well, long time ago. Do you guys remember doing that? I think I did the this oscillator training around this. I think my resistance was slightly higher, if that'll help you recall. I think we had it up here, and it ended up being here. But the difference is the weekly M4 versus the weekly R2, right? But if you recall, pretty sure that was the current, that's what we were doing. So anyway, someone took it up here. I even have it marked actually. Someone had it here, they're front running, and so they're going to do this all day with confidence. Okay, so selling now would be bad. Selling up there would be good. You sell at resistance, not at support. Okay, so many people watch this and they don't sell. They watch this, they don't sell. They watch this, and now they want to sell. And of course, I would assume the opposite. I would say, now that it's fallen so far, it's going to go up and then down. Okay. Well, I've gone an hour and a half. I've gone too long, guys. I apologize. Just having fun. So, I know this sounds like a broken record, but I was up at 1 a.m., 2 a.m., 3 a.m., and then I slept all the way to 5:15, and then I slept from, I started this 8, 7, 6, I think I went to bed at 6 and got up at 7:15. That was my night. Oh, and then I think 11 to 1. So I slept 11 to 1, 2 to 3, 3 to 5:15, and then 6 to 7:15. True story. Last week I was so ridiculously tired, huh? So, I'm saying, after all these years, I still sacrifice. If you think this is going to be easy and fun, you're probably mistaken. This is going to be hard work. It's going to require discipline and effort. But the upside is you dictate when you work. You dictate where you work. So when I go on vacations, like Disney World, for example, I take my computer. If I'm in China, I take my computer. If I'm in South Africa, I take my computer. Why would I want to stop making money? Okay? So it's very, very rewarding and intellectually stimulating. And if you invest, you can make money while you sleep. But if you want to make even more money and more money and more money and more money or whatever, you have to be better than average. You can have half a brain, but you better have a ridiculous, sickening work ethic. So the only reason I bring it up is last week I was really tired and I had all these sob stories. I only slept 4 hours, right? But multiple days only sleeping 4 hours. Here we are. That was my night last night. But I caught some trades and making some money, right? Boom, boom, boom. Right? You and I put those sample trades together, just 5 trades over the course of 5 weeks. They're up more than 1,000 pips. You should be up 5,000 pips because this is just the coaching stuff, right? You can be up, dare I say even should be up 5,000 pips, maybe more. I hope you see that it's possible with the proper planning, proper techniques, proper mindset, that this is what you will be doing. Okay? I hope you see that. This is what you will be doing. And you will get better and better and better. But if you're looking for the quick and the easy, you will fail. If you are passionate about what you do, this is going to be fantastic. You're going to want to do this the rest of your life. You're going to be 83 years old and still doing this. I actually know people, a couple of guys in Europe actually, they're like 97 and they're still doing very complex structured finance deals. Do you know why they're doing it at 97? First of all, they know everyone. And B, their commissions are something like $12 million. Their commissions. One guy literally lives in a castle. The other one literally lives in a jet. He's flying around the earth. He rarely comes down. He has a full-time nursing staff that lives in the jet with him. It sounds like a joke and it sounds like a movie, but it's true. And these guys make massive, massive amounts of money. And they're in their late 90s and they're never going to stop it. And I tell you, they're never going to die because they can't afford it. But do you think they're having fun at the same time? Yeah. So you're going to do this. You're going to do this till you're 85, 87, 92, 95. You're going to be teaching your great, 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 great grandchildren. And I have met families that are foreign exchange traders and have been pretty much forever. Amazing. Like, I've met like the 4th or 5th generation Forex trader for the family. And the family doesn't work. So anyways, this is going to get really, really awesome. Okay? This is going to get really awesome. And I want some of you guys to really succeed. I have some big plans. I am so ready to graduate and just move on. I'll say, thank you, Harvard. That was great. Great 6 years, Harvard. Thank you for an awesome 6 years. But I'm out of here, right? And I'm ready to do some amazing things with you guys. I dream about it at night. I plan on it. I've even gone shopping for like what hotels we're going to meet up at, what parts of the world. And I've been looking at like microphones and like really specific things. So that when I'm done with Harvard, I'm ready to do this other fun stuff that I have in my mind. And it all includes you. But you're going to have to be successful, because I don't want to do things like meet you at a Holiday Inn and teach you how to trade MACD. There are so much bigger and more fun things that we should be doing as a group. So you got like basically 18 months to get ridiculously sickening successful, right? And grow your account and develop your skills. Because once you got that down, that's the easy part. There gets to be some very interesting and very fun things around the corner that we should be discussing, especially if you want to raise a fund and trade other people's money. Oh my gosh, this is going to get really awesome. Okay? But you better be a successful trader. So hurry up, man, hurry up. Start listening, start taking notes, start radically changing everything, and then put it together. Okay? All right? Deal? Yeah? Com says he's enjoying my book. I got 5 more books in here. I got to find the time to get this out. Maybe I'll write thinner books. Yeah. So anyways, hurry up. Get on with it. Start making the radical changes. Start radically changing so that I can teach you proper guerrilla warfare. Huh? We'll go after the greed and the sloth of the 800-pound gorillas we call hedge fund managers, and we'll destroy them. And we'll have a great time doing it. So hurry up. So peace on earth. May the pips be with you. May our profits be above average. I will see you tomorrow. I will see you the next day. I will see you the next day. And then I got NFP on Friday, which is over at FX Street. And I don't know, we're getting pretty close to, we're more than 13 and a half years doing that one webinar, right? So that's pretty cool. So I hope to see you over there too. So without further ado, thank you for being on my team. And don't forget, there's about 4,000 videos on YouTube associated with my work. Feel free to watch them all. Please visit Trader's Way and download my chart templates for free too. See ya. Bye.